Okay, so we're getting a lot of questions about the natural gas market. What happened to natural gas in November and December, and where is it going from here? Unfortunately, without our crystal ball, we have no idea, but we've done some analysis and we can make some pretty good guesses. Let's take a look at the daily chart. You'll notice that natural gas started this fiasco trading between $2.70 and $3 for most of 2018. Towards the end of the month, the end of the year in November, and then again in December, we had an explosion in volatility. That explosion in volatility has been blamed on many things. It started as a weather issue. The winter weather came a little faster and was a little more severe than most were expecting. And on that news, we rallied from roughly 280-ish, 270-ish, up to about 350, 360. But what happened after that probably had nothing to do with fundamentals. It was more of just margin calls and chaos and people being blown out of positions is really the honest truth. Above 360, anybody that was short options or short futures started to really feel the pain. The margin man was on their back and they had no choice but to get out. And because everybody was trying to get out of the market at the same time, the market exploded higher. You may have heard of a couple of large hedge funds that blew up. And if you don't know what blow up means, it means they've lost all of their money, and in some cases even a lot more money than they had in the fund. So this process that occurs here, you can see my cursor hopefully, this took about a month and a half to play out, but we had an initial spike from 370-ish up to 460 in a matter of a day or so. You'll notice these are daily bars. So this is a massive, massive move. I'm not going to say that we've never seen this in natural gas, because natural gas is known as the widowmaker for a reason. It does this every once in a while, but it's been a few years since we've seen this, and honestly, it caught a lot of traders off guard. And so once that move occurred and everybody was panicking to get out and getting out because they were out of money or out of fortitude or whatever the case was, then we get this switchback trading. And you'll notice these daily bars are far larger than these over here, and that's because the market was just that much more volatile. A market that normally would trade 3 to 5 cents in a day was trading 30 to 50 to 80 cents in a single day. And so we're seeing just historic volatility going on for several weeks as the market's switching back and forth. People are getting beaten up. The longs, the shorts, regardless of what side you're on, people were taking some pain. And so then we notice that afterwards the market plunges and ironically comes all the way back down to the 280-ish area. Actually, I think we printed in the 270, 265 area. But that gets us, actually I take back, not 265, sorry, about 275. But anyways, it gets us back to the price where all of this started. So all of that money made or lost really was for nothing over the last couple of months, and that's the saddest part about it. So anyway, where do we go from here? Well, again, we're just making guesses here, but from what I can see, keep in mind, like we tend to look at the COT report, which is the Commitment of Traders report. With the government shutdown, that's not available to us, so we're just making some assumptions here. But from what I can see, the market sentiment has gone from extremely bullish to bearish. The consensus bullish index that we follow in natural gas is saying roughly 35% of the people polled are bullish natural gas. That's close to an extreme. 25% or less is considered extreme. So our take is most people are bearish down here, and as contrarians, we look at that as a possible place for a reversal. We also see some pretty sharp trend line support that the market's been holding for all of 2018, and the market tested it last week and successfully held. It hasn't necessarily turned around on a dime and moved higher, but it does seem to be in the process of putting in a bottom. We also noticed that the Williams %R and the RSI, which are two indicators we like to follow, are both in oversold territory, and that should promote the upside. So if our assumption is correct, in that the last 2.5 months worth of price action is mostly due to speculators being forced out of the market, first on the way up, then on the way down. Our best guess is that the fair price for natural gas, based on fundamentals and actual supply and demand for the product, not for the trading products, is going to put us somewhere in the 350 mark. Somewhere between 345 and 370 is where we think that the March natural gas futures might recover to in the coming weeks. I mean, after all, we are in the winter season. The market right now is pricing in absolutely tame and mild weather, and maybe that's going to be the case, but it's only January 9th. There's plenty of time for things to cool down. Another thing that we're looking at is the U.S. dollar, and anytime that we speculate on commodities or try to make a guess on where we think commodity prices are going, we look at the U.S. dollar. In our opinion, this chart is looking like it's rolling over, and that means we think the U.S. dollar is probably going lower, probably going to the bottom of the trading range, somewhere in the low 90s. And if that is the case, it should put upward pressure on all commodities, including natural gas. So I appreciate you listening in. If you have any questions or if there's anything that we can do for you, we'd love to hear from you. We are DeCarley Trading. We're a futures and options brokerage service located in Las Vegas, Nevada. If you simply want to learn more about trading commodities, please take a look at Higher Probability Commodity Trading. It's a book that I've written that encompasses all the lessons I've learned, good, bad, ugly. You can find it on Amazon for cheapest. And also visit our website. It's DeCarleyTrading.com. There's several free videos, educational material. You can sign up for free newsletters. All right, thanks for joining us.